This one concept will change the way you trade forever, guys. My name is AABandsFX. I'm a prop firm trader who has made over $300,000 purely through day trading. And honestly, I'm just sick and tired of being in this space and seeing people who don't know what you're talking about try to teach you guys how to really day trade. It's all fugazi. They've all lied to you, but I'm here to teach you guys real concepts that actually do work, which lead me to make 5 figures every single month. Liquidity sweeps are the real cheat code to understanding where the markets will actually react from and have the real move. Just think about this logically, guys. If you were an institution, a bank, a government trading the markets, you would want to have the best entry possible, and you would honestly want to fake out as many people possible before moving the market in the direction that you want. This is exactly what happens. The market makers will induce retail traders to go in a certain direction, then they will push the market the opposite direction. If you can identify when this is happening and how it happens, you can trade like the banks, guys, and you won't even lose anymore. And this is exactly what I'm going to teach you guys in today's video. So buckle your seatbelts. Let's get into the video. All right, guys. So what are liquidity sweeps? All right. So I have a very simple breakdown here. I'm not trying to make this video 30 minutes long. Again, a lot of these concepts, trading concepts, can be very, very easily simplified in 10 to 15 minutes, as well as with the necessary understandings for you to actually make it into something, right? So liquidity sweeps, okay? It is essentially, and I will say, another term for this is going to be called highs and lows. So if someone refers to just highs and lows, they're going to be referring to liquidity sweeps, right? So essentially, a liquidity sweep is when price will take out a high or low and reverts very, very intensely. Okay. And the significance of this is that, banks, institutions, market makers, all the people who are participating in the market participants who, have a lot of liquidity, or a lot of money, and they want to, they have a lot of ability to move the market. They obviously want to be put into their orders at the best possible place, right? So they just can't hit the buy and sell button, right? Let's say you want to put like 10,000 lots of gold, right? Just hypothetically, 10,000 contracts, 10,000 lots, and you want to buy it at let's say $2,000 on gold. Okay, you can't, institutions can't just press the buy or sell button and put 10,000 lots of gold at one singular price point, because there's not enough liquidity at the singular price point or enough people to fill their positions for that amount of contracts / lots. So what happens is they obviously want to optimize, the way they can get into their position based on this example, right? And essentially what they'll do is they will, again, put their orders at very, very key liquidity points, in terms of where, the most liquidity is, or they're going to, scale into their position and just keep adding, putting limit orders and adding contracts as price keeps going lower and lower and lower, to then obviously push price up eventually, at their desired point, right? So they all use this in simple terms to generate liquidity for their block orders, right? And an example that we have right here with price is that, as you can see, we have a low right here. And again, this is also swing highs and swing lows, right? Above swing highs, above swing lows, they're going to be resting liquidity, resting orders. And yeah, so as you can see right here, price comes in, takes out this low, and we immediately reject very, very sharply, right? We reverse hard, and price does this, right? Now, I didn't actually have that example set up on screen right here, but the principle is going to be the same, right? If we just look at the chart right now, and I want you to be able to spot this with your eyes, key swing highs and swing lows, right? These are key liquidity points, are going to be your areas of where the most active participants are, the most activity is, and the most aggressiveness is going to happen, right? So how do we take advantage of this? Well, we know that if price will reverse at key swing highs and swing lows, we need to be able to then capitalize off that in a high probability manner, right? With, other concepts like a change of character, a break of structure, a candle confirmation, maybe a footprint confirmation, etc., to then therefore enter on the trade. Or after the liquidity sweeps happen, we want to then understand the structure and then see where price now might retrace to, and then continue moving forward based on the order flow that has now shifted, right? So obviously in this case, gold is very, very fundamentally trending right now, but as you can see in real time, as we're making new swing highs, new swing lows, right? Let's say you were in real time, I'm going to pull up my indicator right here, my Asian session indicator. if you were in real time, you know, you would see, oh, like Sunday opens right here, and what do we have right here? We have all these highs, right? We have all these highs marked out, and it's not a coincidence that price, you know, draws to this high and then immediately dumps. So how do we take advantage of this? So number one is identifying the fact that these higher time frame swing highs and the swing lows, these pivot points, are going to be your main areas of liquidity, right? And essentially all we want to do is that we want to wait for some type of confirmation, and I would not use the 1 minute or, you know, anything like super low or past 3 minute. You know, the 5 minute is going to be what's good, like a 5 minute confirmation, a 15 minute confirmation, etc., to then obviously you know, take advantage of kind of what's going on. Now this video is not going to be about identifying change characters, breaks of structures, things of that nature. It's mainly to purely identify, you know, and train your eye and seeing, you know, where these new highs are being made, these new highs are being and these lows are being made, etc., and then you know, what price does after that, right? But essentially what you'd be doing is you'd be entering in on a characteristic candlestick confirmation, and this is a very nice one. This is called the Harami pattern. If you guys want a full day trading guide in 28 pages that will make you profitable, click the link below in the description and I'll send it over right to you. I just know that off the top of my head, but in reality it's just a nice engulfing closure below this low. But yeah, this would be like an example of a trade you'd be able to take. Nice little 1 to 2 after you've made a new high. And yeah, very simple trade. But how can we utilize this now in terms of, like, you know, after it's happened? Like, what if you missed that trade, right? Excuse me. Essentially, after that aggressiveness has happened, you see that aggressiveness stepping in, you then want to just be playing retest to very key significant you know, supply or demand levels based on the lower time frame, like the 3 minute, 5 minute, after the bigger move has happened, right? So, you know, you don't want to, like, you know, look for like a 1 minute break of structure, like a 1 minute change of character, because you got to understand, like, you're gonna have a lot of fake outs and it might not be, like, you know, to the take. Like, for example, like if you did this, right, like a super tight stop, like you would have got stopped out, right? But we do see, like, after we made that aggressive move down, this is obviously not going to be like an internal change of character, but you can understand that, you know, on the supply and demand is going to be pervasive through every single time frame, right? So if I were to mark out now my supply demand levels based on this structure, you're going to notice that price will gravitate towards these supply demand levels as retest points, right, based on this aggressive selling that happened. And then you can obviously put limit orders at that point. You can then enter in off like a footprint confirmation, another, you know, maybe a 1 minute candlestick confirmation after the main moves already happened. But like, if you're trying to enter in off the main move specifically, you just want to wait for that lower time frame, or not like a lower time frame, but like a medium time frame confirmation, a 5, 15, 30 minute confirmation, right? So in this case, obviously you could put your limit order right at this demand level right there, stop loss above the swing high, and then gone for anywhere from that 1 to 2.6 RR range. I will say, you know, you don't want to, you know, depending on your stop as well, if you made this really tight, you know, this could have gone for anywhere from 1 to 4, right? So I can't tell you how to do your risk to reward and manage your risk, but, you know, anywhere from, you know, 1 to 1, 1 to 2, 1 to 3, 1 to 4, you can definitely get that, right? Now again, it's not going to be perfect every single time, but that's exactly why we have risk management and trade limits on the day, right? So if I delete this now, and we're actually looking at the continuous contract, let's actually go and look at the actual contract, not the continuous contract, to get a better understanding, right? A lot of people, for example, they'll see, oh, this high was made right here, right? And now this is the liquidity sweep, right? We should expect price to do this and then dump down, right? But you're going to notice, right, that, oh, it doesn't happen, right? We push up above this high, and then despite having a nice 5 minute candlestick confirmation right here, we do not end up going lower, right? And, you know, you'd be going maybe like 1 to 4, whatever, something like that, right? And we just keep pushing up. And then maybe, you know, you're waiting for another confirmation, which ends up happening right over here, and then you do end up making your money back, maybe a 1 to 1.5. It ends up happening. But my point is this is why you have risk limits and trade limits on the day, to prevent yourself from just trying to take a reversal trade. But anyways, regardless, let's kind of like identify where these moves are happening, right? So if I were to kind of look at this structure, where's our liquidity sweep happening? Well, it's happening right here. Let's kind of like go back in time, right? So we have one right here. You can kind of see we had the initial move down. This is news. We push down a little bit lower, but you go higher. We did not have one up here. We had one right here, right? Boom. We tap that high out right here. We push lower, right? Over here, have these lows right here. We tap these lows perfectly right here. Push up higher. And even right here as well. We then make that new high again. Come over here, take it out, go lower. And let's just keep going back to train your eye. Obviously, we just use that example. We also have one. This is, I think, what, Thursday? Yeah. So we have another high right here. We take it out. We go lower. Okay. My whole point where I'm going with this is that if you see swing highs and swing lows, right? Obviously, price is a little bit more complex than this. You can have a very, very strong system of trading and a way of trading by just taking orders and taking trades above these swing highs and swing lows, right? So, for example, if you have a swing high here, price would do something like this, go down, right? It could even, go over here, right, and then go down, right? And then putting your orders, right, resting below these swing highs and swing lows are what's going to give you the highest probability and the cleanest trades, essentially. So instead of just getting in right after, like, just getting in at a random point, you want to get into the swing high or swing low. So, like, for example, you'd be getting in like maybe on a level right here, and then like another level right here, right? And then you'd be looking for that reaction move, the reactionary move up or down, right? Really, really simple stuff. Now let's keep going. And kind of showing you examples of how this works. But as you can see right here, boom, new high being made, move down, and then if you can see right here, boom, slight tap, new high being made, perfectly move down, right? We come over here, let's delete this, right? This low, new low being made, and then immediately a push up, okay? And this is very, very, very powerful stuff, very, very, very powerful stuff. And then let's keep going. You can see it even happens all the way over around there. A new high being made right here, boom, we tap it, and then we move down, right? New high being made, new low being made past here and even past here, right? And then we have that move up, right? Very, very cool stuff. Let's keep going. All right, boom, new low made right here, slight moves higher. I want you to train your eye to mark out these swing highs and swing lows and understand that you can have, great taps of these swing highs and swing lows and then reversals after that, essentially. And now obviously, seeing the strength of the reversal, like, and then understanding like, oh, is it going to be a fake out, like a liquidity sweep, or like a real move, right? That's a whole nother video. But this is what a liquidity sweep is. Essentially, it's a new high being made and then an aggressive, sell off after that new high is being made. Very simple. Okay, now we're starting to get into an area of where the contract is starting to be different, but like even here, right? Boom, new highs, new lows, excuse me, and then we tap those lows perfectly, aggressive move up, right? Tap these lows, aggressive move up, tap these lows, right? Aggressive move up. Specifically, look at that perfect tick reaction, right? And then you can definitely capitalize off this and get a really, really, really high probability trade. So it's pretty good stuff, I will say. If you guys want me to make a full in-depth video on this that's very, very advanced, I will do that for you guys. Yeah, just let me know. All right, and with that, I'll see y'all later. Take care.